Hello and welcome. Before we begin, I need to make something very clear. Everything I share with you today is general information only. It is not personal financial advice. Your situation is unique. Always speak with a licensed financial advisor or accountant before making any major financial decisions. Now, with that said, let's dive in. I want you to take a deep breath with me. Right now, in through the nose, out through the mouth. Good, because I know what you might be feeling as you listen to this. You're over 50, maybe you've been made redundant, maybe you've watched your superannuation balance go up and down like a yo-yo, maybe you've looked at your bank account and thought, this isn't enough. Maybe you've been lying awake at 3 in the morning, staring at the ceiling, wondering if you'll ever feel secure again. And now someone is talking to you about starting a business. Starting a business at your age? When you should be winding down, right? When you should be planning for retirement, not taking on more risk. I understand. I understand that fear. I understand that voice in your head saying you're too old, that you've missed your chance, that starting a business is for young people with energy and time and nothing to lose. But here's what I want you to know. That voice is lying to you. Starting a business after 50 is not reckless. It's not foolish. It's not a desperate gamble. In fact, for many Australians in your position, it might be one of the smartest financial moves you can make. But only if you do it right. Only if you understand what you're getting into. Only if you plan carefully, move deliberately, and build something that fits your life, not someone else's dream. Today, we're going to talk about all of it. The fears, the facts, the strategies, the real stories. And by the end of this conversation, you'll know whether starting a business is right for you. You'll know what questions to ask. You'll know what steps to take. And most importantly, you'll know you're not alone in this. So let's begin. Let's talk about what it really means to start a business after 50 in Australia today. Now, I want to take you back in time for a moment, back to the Australia that many of you remember, the Australia of the 1970s and 80s, back when things felt different. Do you remember? Back then, if you had a job, you kept it. You worked for the same company for 30 years, you got your gold watch, you got your defined benefit pension, you retired at 60 or 65, and you knew exactly how much money you'd receive every fortnight for the rest of your life. The employer took care of it. The government took care of it. You didn't lie awake worrying about market crashes or inflation or whether you'd saved enough. Security was just part of the deal. But that world is gone. The Australia you're living in now is fundamentally different. Superannuation replaced those old pensions in the early 90s. Now the responsibility sits on your shoulders. You have to save enough. You have to invest wisely. You have to hope the market doesn't collapse just before you retire. And if something goes wrong, if you lose your job at 55 or 58 or 62, there's no safety net. Not really. Centrelink has strict asset tests and income tests. The age pension, if you qualify, isn't exactly generous. And finding a new job in your 50s or 60s, let's be honest, it's brutal out there. Age discrimination is real, even though it's illegal. Employers see your resume and they see your age, and they move on to someone younger. So what are you supposed to do? You can't retire yet because you haven't saved enough. You can't find a job because no one will hire you, and you're watching inflation eat away at your savings every single month. Groceries cost more, petrol costs more, electricity costs more, everything costs more, and your money just sits there barely growing, sometimes shrinking. This is the context we're living in. This is why so many Australians over 50 are now looking at business ownership. Not because they're greedy, not because they want to get rich quick, but because they need another option. They need a way to generate income that doesn't depend on convincing some hiring manager that they're still relevant. They need control. They need flexibility. They need hope. And here's the thing, you're actually in a better position than you think. Yes, I know that sounds ridiculous, but hear me out. You have something that young entrepreneurs don't have. You have decades of experience. You understand how businesses actually work. You've seen companies succeed and fail. You've managed people, budgets, projects. You've dealt with difficult customers and impossible deadlines. You've learned patience. You've learned resilience. You've learned that most problems can be solved if you just stay calm and think clearly. That's worth more than energy. That's worth more than youth. And let's be practical. You probably have some savings, maybe not as much as you'd like, but something. You might own your home, or at least have significant equity. You have a network of contacts built over 30 or 40 years. You have credibility. You have skills that people will pay for. Young people have time. You have wisdom. And in the right kind of business, wisdom wins. So the question isn't whether you're too old to start a business. The question is, what kind of business makes sense for you at this stage of life? Let me walk you through the technical side of this. I'm going to explain what starting a business actually means from a legal and financial perspective. Don't worry, I'll keep it simple, but you need to understand these basics before you make any decisions. First, let's talk about business structures. When you start a business in Australia, you have a few options. You can operate as a sole trader, you can set up a partnership, you can create a company, or you can establish a trust. Each structure has different legal implications, different tax implications, and different levels of complexity. Most people over 50 who are just starting out choose to begin as a sole trader. Why? Because it's simple. You register an Australian business number, what we call an ABN. You might register a business name if you want to trade under something other than your own name, and that's pretty much it. You're in business. As a sole trader, you and your business are legally the same entity. That means you keep all the profits, but it also means you're personally responsible for all the debts and liabilities. If something goes wrong, your personal assets are at risk. That's the trade-off for simplicity. Now, from a tax perspective, sole traders report their business income on their personal tax return. Your business income gets added to any other income you have, like part-time work or investment income, and you pay tax at your marginal rate. The current individual tax rates in Australia are progressive, meaning the more you earn, the higher percentage you pay on each additional dollar. But here's where it gets interesting for you. If you're over 50 and still working part-time or casually, starting a business might actually give you some tax advantages. Why? Because you can claim deductions for business expenses, your computer, your phone, your internet, your home office, your car if you use it for business purposes, professional development, marketing. All of it reduces your taxable income. Let's say you're earning $40,000 a year from part-time work, and you start a small consulting business that brings in another $20,000, but you have $10,000 in legitimate business expenses. You're only paying tax on $50,000 total, not $60,000. Those deductions matter. Now let's talk about superannuation. This is crucial for people in your age group. If you're a sole trader, you're not required to pay yourself superannuation. You're not an employee. But here's what many people don't realize. You can still make personal concessional contributions to your super fund, and you can claim a tax deduction for them. Concessional contributions are contributions that go into your super before tax. They're taxed at 15% inside the fund, which is usually much lower than your marginal tax rate. There are annual caps on how much you can contribute this way, and those caps do change from year to year, so check with your accountant. But generally, if you're earning business income, you can put some of that money into super, reduce your tax, and boost your retirement savings at the same time. That's a powerful strategy. Now, what about Centrelink? This is where things get complicated, and you need to be very careful. If you're receiving the age pension or planning to in the next few years, business income absolutely affects your entitlements. Centrelink has income tests and asset tests. If your business generates too much income, your pension reduces. If your business assets are too high, your pension reduces. Every situation is different, and the thresholds change regularly. Here's my advice. If you're close to pension age, and you're thinking about starting a business, talk to a financial advisor who specializes in Centerlink rules before you do anything. The last thing you want is to start a business, work hard, and then discover you've accidentally disqualified yourself from benefits you were counting on. Can it be done? Yes. People run small businesses and still receive part pensions all the time, but you need to structure it correctly. Now, let's talk about the practical side. What does it actually cost to start a business? Here's the good news. You don't need much money anymore. 20 years ago, starting a business meant renting a shop front, buying inventory, hiring staff, spending tens of thousands before you made your first sale. That was real risk. That's what kept most people out of business ownership. Today, you can start many types of businesses for less than the cost of a second-hand car. If you're offering a service, a consulting business, coaching, bookkeeping, graphic design, writing, whatever your skill is, your startup costs are minimal. A computer, a phone, a website, maybe some software subscriptions. You could be up and running for $2,000 or $3,000, maybe less. If you're selling products, you can start online. You don't need a physical shop. You can use platforms like Etsy or eBay or Shopify. You can test the market before you invest big money. You can start small and grow gradually. This is important for people over 50. You don't want to bet your entire retirement savings on an untested idea. You want to start small, prove the concept, make sure people actually want what you're offering, make sure you actually enjoy the work. Then, and only then, do you scale up. Think of it as a pilot program, not a gamble, a test. Now, here's something else you need to understand. Starting a business doesn't mean you have to quit everything else. You can start a business while you're still working part-time. You can start a business while you're on job seeker. You can start a business while you're caring for a partner or parent. You can start slowly, working just a few hours a week, and build from there. This is the beauty of service-based businesses especially. You control your time. You control your workload. If you want to work 10 hours a week, you work 10 hours. If you want to work 40, you work 40. You decide. For someone over 50 who's worried about energy levels, health issues, caring responsibilities, this flexibility is everything. You're not signing up for another high-stress corporate job. You're creating something that fits your life. All right, let's get real now. Let's talk about the pros and cons, because I'm not here to sell you on starting a business. I'm here to help you make an informed decision. Let's start with the benefits. Why do people over 50 start businesses?
First, income. That's obvious. If you can generate even an extra $500 or $1,000 a week, that changes your life. That's the difference between scraping by and living comfortably. That's groceries without stress. That's being able to help your grandkids. That's not having to choose between heating and eating. Second, purpose. This is huge, and people underestimate it. When you lose your job in your 50s, you lose more than a paycheck. You lose your identity. You lose your routine. You lose your sense of contribution. Starting a business gives that back to you. You're creating something. You're helping people. You're using your skills. You matter again. Third, control. You decide when you work. You decide who you work with. You decide what projects you take on. No boss breathing down your neck. No office politics. No mandatory meetings. Just you doing work that matters on your own terms. Fourth, legacy. Maybe you want to build something you can pass on to your kids. Maybe you want to create jobs in your community. Maybe you just want to prove to yourself that you've still got it. All of that is valid. Fifth, tax advantages. We talked about deductions, but there's more. Depending on your structure and your income level, there might be ways to split income with your spouse. There might be ways to use your super more strategically. Again, talk to an accountant, but the tax benefits are real. Now, let's talk about the downsides, because they exist and you need to know them. First, uncertainty. When you work for someone else, you know what you're getting paid. You know when your next paycheck arrives. In business, especially at the start, your income fluctuates wildly. Some months you might make great money, other months nothing. That uncertainty is terrifying, especially when you're on a fixed budget. Second, responsibility. Everything falls on you. If a customer isn't happy, you deal with it. If the computer crashes, you fix it. If the website goes down, you sort it out. There's no IT department. There's no HR department. There's just you. For some people, that's liberating. For others, it's exhausting. Third, time. Yes, you control your schedule, but especially at the start, you might be working more hours than you ever did as an employee. Building a business takes effort. It takes hustle. And when you're over 50, you might not have the same energy you had at 30. Fourth, financial risk. Even a low-cost business requires some investment, and there's no guarantee you'll make that money back. If it doesn't work, you've lost those funds. If you've borrowed money or used savings you needed for something else, that loss hurts even more. Fifth, stress. Running a business is stressful. Chasing invoices, dealing with difficult customers, managing cash flow, worrying about whether you'll get enough work next month. That stress can affect your health, your relationships, your sleep. You need to be honest with yourself about whether you can handle it. So those are the trade-offs. Now, let me tell you about Bruce and Jenny. Bruce and Jenny are a couple I worked with a few years ago. They're not real, but they represent a very real situation I've seen many times. Bruce was 57. He'd worked in middle management for a manufacturing company for 30 years. Good job, decent pay, but the company restructured and Bruce was made redundant. He got a payout about $80,000 after tax. He tried to find another job, but after 6 months of rejections, he was losing hope. Jenny was 55. She'd been a primary school teacher, but she'd taken early retirement to care for her aging mother. She loved teaching, but going back full-time wasn't an option anymore. They owned their home outright, no mortgage. That was good, but their super wasn't huge. Combined, maybe $400,000. They worked out that if they retired at 65, they'd have enough to live on, but not comfortably. Certainly not enough to travel or help their daughter buy a home or deal with any major unexpected expenses. They were scared.
So Bruce had an idea. He'd always been good with his hands. He'd built furniture as a hobby for years. Beautiful stuff. Dining tables, cabinets, bookshelves. Friends and family would always say, "You should sell these." So he decided to try. Bruce didn't quit everything and open a big workshop. He started small. He used part of his redundancy payout, maybe $10,000, to buy some better tools and materials. He set up a small workshop in their garage. He created a basic website. He joined some local Facebook groups. He started taking commissions. At first, it was slow. 1 table in the first month, nothing in the second, 2 small jobs in the third. But word spread. People saw his work. They told their friends. He started getting repeat customers. By the end of the first year, Bruce was making about $30,000 in revenue. After expenses, he was probably netting around $18,000 to $20,000 in actual income. Not amazing, but not nothing. Jenny, meanwhile, started tutoring. She knew maths and English inside out. She didn't want to go back to a classroom, but she could help kids one-on-one or in small groups. She registered an ABN. She put a notice up at the local library and community center. She charged $40 an hour. Within a few months, she had 10 regular students. That's 10 hours a week, $400, $1,600 a month, about $19,000 a year. Combined, Bruce and Jenny were now bringing in an extra $35,000 to $40,000 a year from their small businesses. That changed everything. They weren't rich, but they weren't desperate either. They could breathe, they could plan, they could actually enjoy life a bit. And here's the best part. They were both happier. Bruce loved building things. Jenny loved teaching again, but on her terms. They had purpose, they had control, they had hope. Now, was it easy? No. Bruce had to learn how to market himself. He had to learn basic accounting. He had to deal with a customer who refused to pay, and that was stressful and frustrating. Jenny had to manage cancellations and difficult parents. They both worked evenings sometimes. They both had moments of doubt. But overall, it worked. They didn't start a business to get rich. They started a business to survive, to stay afloat, to maintain their dignity and independence. and it gave them that. So here's my question for you. Could you be Bruce or Jenny? Do you have a skill people will pay for? Do you have the courage to try something new? Do you have the discipline to start small and build gradually? If the answer is yes, then maybe, just maybe, starting a business is the right move for you. All right, let's talk strategy. Let's talk about what you actually do if you decide to move forward with this. Step 1. Identify your skill. What are you good at? What do people come to you for advice about? What have you done for 30 or 40 years that you could now do independently? This isn't about inventing something new. This is about packaging what you already know into something people will pay for. Maybe you're a bookkeeper. You could offer bookkeeping services to small businesses. Maybe you're a project manager. You could consult with companies that need help getting organized. Maybe you're a teacher. You could tutor. Maybe you're a nurse. You could offer home health visits or aged care support. Maybe you're great at gardening. You could maintain gardens for busy professionals. Think about your skills. Make a list. Be specific. Step 2. Research the market. Who needs what you offer? Are there enough potential customers in your area? If you're planning to work online, are there enough customers nationally or globally?
This doesn't have to be complicated. Start by Googling. Look at what other people are offering. Look at their prices. Read reviews. See what customers complain about. See what gaps exist. Talk to people. Ask friends and family. Post in community groups. Say, I'm thinking about offering this service. Would anyone be interested? Gauge the response. You're not committing to anything yet. You're just researching. Step 3. Test before you invest. Before you spend thousands on equipment or advertising, test your idea. Offer your service to a few people for free or at a heavily discounted rate. See if they value it. See if they'd pay full price. See if you actually enjoy the work. This is critical because sometimes an idea sounds great in your head, but when you actually do it, you hate it. Better to find that out before you've invested heavily. If the test goes well, if people are happy, if they're willing to pay, if you enjoy it, then move to step 4. Step 4. Start small and legal. Register your ABN. Register a business name if needed. Set up a simple website or social media page. Open a separate bank account for business income and expenses. Get insurance if your business requires it, like public liability insurance. Keep your costs low. Don't rent an office. Don't buy expensive equipment. Don't hire staff. Just you, working from home or wherever makes sense, keeping overheads minimal. Step 5. Set your prices properly. This is where people over 50 often make a mistake. They undercharge. Why? Because they're nervous. They think they have to be cheap to compete. They undervalue their experience. Stop it. Your experience is valuable. Your reliability is valuable. Your professionalism is valuable. Charge accordingly. Look at what others charge for similar services. Don't be the cheapest. Aim for somewhere in the middle to upper range. And remember, your price needs to cover not just your time, but your expenses, your tax, your superannuation contributions, and your profit. A good rule of thumb for service businesses is to work out what you need to earn per hour to cover all your costs and give you a reasonable income, then add at least 20 to 30% on top. That's your hourly rate. Step 6. Market yourself consistently. You don't need fancy advertising. You need consistency. Tell everyone you know what you're doing. Post on social media regularly. Join local business groups. Attend community events. Ask happy customers for referrals and reviews. Word of mouth is still the most powerful marketing tool, especially for small businesses run by people over 50. Your reputation matters. Your relationships matter. Use them. Step 7. Track everything. Keep every receipt, track every dollar in and every dollar out. Use a simple spreadsheet or accounting software like Xero or MYOB. Why? Because at tax time you'll need it. Because if you ever want to apply for a loan or a grant, you'll need it. Because understanding your numbers helps you make better business decisions. Step 8. Build a safety buffer. As soon as you start making money, put some aside, not all of it, but some. Build up a buffer of 3 to 6 months of expenses. That way, if you have a slow month or an unexpected cost, you're not panicking. This buffer is your emotional safety net. It's what lets you sleep at night. Step 9. Review and adjust. Every 3 months, sit down and review. What's working? What's not? Are you making enough money? Are you enjoying it? Do you need to change your approach? Business isn't static. You need to adapt. Maybe you need to raise your prices. Maybe you need to stop offering a service that's not profitable. Maybe you need to focus more on marketing. Be honest with yourself and be willing to adjust. Step 10. Know when to stop. Here's the hard truth. Not every business succeeds. If after 6 months or a year it's not working, if you're losing money, if it's destroying your health or relationships, it's okay to stop. Stopping isn't failure, it's wisdom. You tried, you learned, you move on. But if it is working, if you're making money, if you're happy, then keep going, keep building, keep growing at whatever pace feels right for you. Now let's talk about something important. Let's talk about your mindset. Because the biggest barrier to starting a business after 50 isn't money, it isn't time, it isn't skill. It's fear. Fear of failure, fear of judgment, fear of looking foolish, fear of losing what little security you have left. I get it. But let me ask you something. What's the alternative? You sit at home, watching your savings dwindle, feeling worthless, waiting for someone to hire you, knowing they probably won't? That's not safer. That's not less risky. That's just a different kind of risk. The risk of regret. The risk of wasting your final good years. The risk of never knowing what you could have achieved. You're going to be 60 or 65 or 70 anyway. The years pass whether you try something or not. So why not try? Why not give yourself a chance? Think about the worst-case scenario. You start a business, it doesn't work, you've lost some time and some money, but you've gained experience, you've gained confidence, you've proven to yourself that you're still capable of learning, of trying, of taking a risk. That's not failure, that's courage. And now think about the best-case scenario. You start a business, it works, you're generating income, you're enjoying your work, you're meeting new people, you're building something, you're thriving. That's not a fantasy. That happens to people every single day. Why not you? Here's what I want you to remember. You are not too old. You are not past your prime. You are not irrelevant. You have decades of experience that young people would kill for. You have resilience, you have patience, you have wisdom, you have skills, you have a network, you have so much to offer. The world might have convinced you that you're over the hill, that your best days are behind you, that you should just quietly fade away. Don't believe it. Your 50s and 60s and even 70s can be the most fulfilling, creative, impactful years of your life. But only if you choose to make them that. Starting a business is one way to do that. It's not the only way, but it's a powerful way. So ask yourself, what do I want my life to look like 5 years from now? Do I want to still be sitting here wishing things were different? Or do I want to be running a small business, earning money, feeling useful, feeling proud? You get to choose. Let me leave you with this. There's a concept I love called the third act. Your life has 3 acts. The first act is your childhood and education. You're learning, you're discovering who you are. The second act is your career and family. You're working, you're building, you're raising kids, you're paying bills, you're grinding. But then comes the third act. The third act is now. Your 50s, your 60s, your 70s. The kids are grown. The mortgage is paid, or close to it. You're not climbing the corporate ladder anymore. You're free. And the question is, what will you do with that freedom? Some people spend their third act in fear, worrying about money, worrying about health, shrinking, retreating, waiting to die. But others spend their third act in growth. They start businesses, they volunteer, they travel, they learn new skills, they take risks, they live fully, richly, boldly, until the very end. Which third act do you want? Starting a business after 50 is scary, I'm not going to lie to you. It's uncertain, it's hard work, it requires courage. But it's also exciting, it's empowering, it's life-giving. You spent the first 2 acts of your life doing what you had to do, working for someone else, paying the bills, taking care of others. Now, in this third act, you get to do what you want to do. You get to build something for yourself. You get to use your skills in a way that brings you joy. You get to prove that you still matter. You get to write your own ending. That's worth trying for. So if you're sitting there listening to this, wondering if you should take the leap, here's my advice. Start small, test carefully. Don't risk everything, but do try something. Talk to people who've done it, read books, take a course. Reach out to organizations like your local small business development center. Get advice from an accountant and a financial planner. And then, when you're ready, take that first small step. Register an ABN, build a website, make your first sale. See how it feels. You might discover that you love it. You might discover a whole new chapter of your life that you never expected. You might discover that you're stronger, more capable, more resilient than you ever gave yourself credit for. Or you might discover it's not for you, and that's fine too. At least you'll know. But don't let fear make the decision for you. Don't let age make the decision for you. You're not done yet. You still have so much to give, so much to build, so much to experience. This is your third act. Make it count. Thank you for listening today. I hope this has been helpful. I hope it's given you some clarity, some hope, some direction. Remember, this is general information only. It is not personal financial advice. Speak with a licensed financial advisor or accountant about your specific situation before making any decisions. But whatever you decide, I want you to know this. You matter. Your experience matters. Your wisdom matters. Your contribution matters. Don't let anyone, including yourself, tell you otherwise. Good luck. Take care, and I'll speak with you again soon.